Good weekend, all. Ira Epstein, and here we are with your SPDR-ETF stock market wrap-up, your weekly edition. And this is for August 18th, Friday, 2023. In Chicago, we're getting buzzed. We have the air show this weekend, so we're having, I guess the Thunderbirds are back. They haven't been here in 5 years. That'll be exciting because they do low levels and right over a city. That's pretty exciting. I was watching the jets. I used to go out when I was flying myself. I was a pilot for a short while, very short. Thank God I'm not in the air. I was the world's worst. But I would go out to Gary Airport and watch it because all the planes are there, and it's fascinating, all these planes, and you really get to see it. It's just phenomenal. That's Gary, Indiana. From Chicago, it's 20 minutes outside. All right, so let's talk because this is a crazy week. All right, President Trump not going to go to the debate. He's going to be arrested Thursday or Friday. Might even be mugshots of him and the whole thing. This is a state deal, not a federal. So it's all different. I don't know what the protocols will or won't be. That should be exciting. We are watching a gradual slow motion implosion in China. It started with the property market where they never got their arms around the problem. It has now expanded to shadow banks, and now they have steel gates, large ones, police forces. What if I told you that the police have taken pictures of people that are going to this shadow bank demanding their money, then they go visit their house and they tell them, you don't do that again, and you don't even report this to our security commission. I mean, that's what you get when you live in a communist country. They tell you what to do, and that's why you go to prison if you don't do it, okay? Because now you're the problem. Not the bank's the problem, not the property manager. You're now the problem, okay? Then in the U.S., the common theme, as you know now, is, hey, interest rates are up and they're going to stay up forever. We are in a new era, and this is it, okay? What is the cure for higher interest rates? Tick-tock, tick-tock. You know what it is. It's high interest rates. What's the cure for low interest rates? Low rates. Why? Because it changes the economics of the society. It's really simple. So you slow things down enough with high rates, and then things pull back and you don't need those high rates. You keep up mortgage rates high enough. There'll be a number where people don't buy the homes. Then, I need to loan some money out. I'm a bank. I got to get something out there. They pull back. You have too much of a good, anything, rice, corn. You don't produce as much. So after that low price, prices come back up. This is basic economics. So please and please and please, I know you want to listen to certain people that are out there and they're on TV all the time, and their goal is to get TV time because that's how they get paid. Use your own head, think your own way through it. I don't believe high interest rates are here to stay forever. I think they have to be here right now to slow the economy down. But once we see it slowing down, they respond to the economics of the economy. They don't just stay high. All right. I have a special report, as you know, on the bond market. It's going to come off. I don't know if it comes off Sunday by the latest or first thing Monday. I don't know. The computer decides. So if you want to see the report, you're invited to. It's on our website. I cover in it some interesting charts. First of all, everything's chart-based that I do. I do give commentary as I'm talking, and I walk you through it. Price counts. Price counts will look like this on a chart. You get a setup, and it's where the market goes up or down. I teach it, and I show it right there. Then we're going to go into the seasonals. Now, in this particular case, because it's the ad, is the 5 and the blues are probably the 30 years. So, but you can also get the 15. I show all three. So I'm going to show you the 5, 15, 30, what the market typically does, how it does it, where it does it, and what it does at certain times, brought down to as low as the daily basis. How's that? Pretty interesting stuff. Then I'm going to walk you through at the same time the daily charts where I put on the indicators one chart at a time and build up to the story, and then I'll do it on the weekly. And it gives you a pretty good picture. For those of you that took the time and you did go in and you looked at my stock report, I feel pretty darn good about it. I mean, so far, you have to agree, it's playing out pretty much what that did. I'm hoping, I don't know, I'm hoping that this report is the same type of thing for you. So that gives you an idea. How do you get the report? It's a video. It's going to play from our website. You go to iraepstein.com under the word research. You can also move your cursor at any time up here. And if you're a member, a paid subscriber to the things I do, just go to your member login. It's right there. And that brings up that if you're watching me here on YouTube and you don't want to join off our website, but you want to get the morning spider video, you want my morning subscriber video for futures, you see the button here, the blue button. Give it a click and away you go. Pretty simple. All right. So let's go back and now take a look at the charts. As I said, this is your weekend edition, so we're going to look at weekly charts. Now, I'm finishing up with Target. On YouTube, write what other charts you would like me to cover starting next week. I want a new group, and I'll pick it by Monday, so let me know what you'd like me to cover. Don't give me something so esoteric that nobody looks at it but you. It's got to be broad where people like it. I thought Target was a good one this week because I knew their earnings were coming out. TJ Maxx was coming out, Walmart was coming out, and everybody came out very different. But it's interesting as can be because for the week, it's hard to believe this on a big week. I mean, look at these prices, 135 to 124. That's a big size drop in the market from top to bottom, and it still closed higher by 16 cents. Whoa, and you're still caught in this sideways action. That's where you're at. When we take a look at the chart pattern, you have a higher high, lower low. That's not a trend in any manner as I see it. You have bias to the downside because you're under the red line, which is the 18-week average of closes. This is the 200-week. This is the 100. And as long as you're under it, I have a downside bias. The Bollinger Band has not been hit recently since you got through here and hit it. Then you went sideways. So if it drops down, the next support zone is right here, 116.33. If it rallies, the major resistance point is 139.33, the 18-week average. That number is going to drop, though, when we reopen on Monday. Do you know why? Because it's an 18-week average. You're going to go back over here and drop one of these higher numbers and replace it with a lower close here. It has to drop the number when you reopen. In terms of momentum, are we embedded? So both numbers are under 20. Week before, they were both under 20. And the week before, they're under 20. Not under 20. That's what I wanted to show you. Not under. They go to 21, but watch. Week before, both under 20, under 20, under 20. So let me explain what happened. The market had a bearish embedded reading. If you get a reading over 21, which we did here on July 28th, that takes, the way I teach charting, you out of it. The only time you can re-embed without going through the whole process again, which is in my enhanced course on our website, Ira Epstein, go under the word education, enhanced Bollinger Band course. The only time you can re-embed is the week after if it re-embeds on you. And take a look what it does. Market, I'm going to come back here. July 28th, over 21. This isn't back under the 20 level. It's not embedded. It has to go through 3 weeks of doing it. Week 1, week 2. I need another week. I'm just in an oversold position. So not me, but the chart. So the chart is oversold. Interesting, trying to determine. If it embeds, the odds favor you're going back here. If it doesn't embed, it can drift or make it to that 18-week average there. It's in a funny position. Coinbase, probably going back to this 18-week average to find support. Nothing good going on in this. The high interest rates doing it in. If you pay attention, Grayscale did not get any government approval. And guess what? The SEC has decided to go after that ruling against them where a judge said, nah, in certain cases, it's not a security to sell the way that they're selling Bitcoin, Ether, and other. And it depends. If you're an institution, then it is a security. And the SEC saying that makes no sense. It's into a full challenge. They're going to go after it. I was reading the article today. That's not good news. A temporary win, will it stay that way? The SEC could lose the case. We don't know. The upper Bollinger Band stopped KRE, okay. Market's still, though, in an overall trend. Not the daily chart, but the weekly, but it's overbought as can be. I wouldn't be surprised that you have to pull back here to 42.76 to figure out what to do. You know, I'm surprised also that we haven't seen in these regional banks a bit more merger and acquisition. They're ripe for it. They need it. It would be a smart move because of the new capital controls also coming, and they will be effective. In the Chinese shares, come on, this market has just been a one-way street all the way back down because of what's going on there, but it's really not trending. It's just wobbling back and forth from upper Bollinger Band to lower so far. In XLI, the industrial sector, okay, what was with the New York Empire reading? It was a blowout industrial reading. The market is still down for the week, 2.5%. Was that the beginning of something good or a fluke? I don't know. I haven't had a lot of faith in industry, but that woke me up. You also lost an embedded reading. So before you go to this high, the odds are strong that price and wherever the week average comes in, price and that average are going to try to come together before you make a new high. Energy sector, come on. Saudis are doing a phenomenal job with OPEC. They've kept oil off the market. Even with China, this implosion that they're going through, this really painful event, not falling apart here. That says a lot, but it's overbought. I don't think you're getting bulls overly deploying it. Yet, when you look at gasoline and heating oil, it has an extreme, I want to use this word very clear, an extremely historical, I want to use this too, reliability, but that between the 14th and the 28th of August, they typically rise, both of them. I think it was gasoline I forgot which one was first. One's the 14th, one's the 20th, where they kick in. But I pay attention to that. It's interesting that. Now, history has limitations. I mean, if historical things always worked, we'd all be billionaires. So keep in the back of your mind the limitations that past performance does not guarantee future performance. UUP, you got a higher high, lower low, but the dollar winning by all standards on the world stage. And the gold market, how does gold even stay this high? I give it credit. Why is it even here with interest rates as high as they are, the dollar as strong as it is? Why own gold? So, and I've been saying that to you for a long time. So, and I've been saying that on TV stations. So I can see if the market ultimately wants to get here another $6, $7 lower, I would not be surprised. But selling a Bollinger Band? No, I wouldn't ever tell a client to do that. Same thing in the miners. No, I don't tell clients to go short at Bollinger Bands. You're oversold, you're down there, that's a cover short area. If it then turns into something more, fine, but it's not embedded. Tesla, hard to believe how much it's coming down, and I'm hearing they're doing another series of price cuts now. So they are on it again. They keep taking their prices down. Cars are a commodity. Elon Musk recognizes that. He has the profit margin to do the job and really hurt all the other electric vehicle makers, all of them, even the Chinese ones. His costs are not what other costs are. Now, I'm sure that he is watching, like so many others, what is going on. You know, VinFax came out with their whole deal in America. That's the Thai manufacturer, and their stock went crazy. And now they're approaching dealers that, hey, maybe they won't sell. It's the Musk way with their own showroom. You know, there are no real showrooms. They're like fashion stores. You go and you pick your car, and that's basically it. So they want to go with dealers. It's not that easy. Don't fall into that trap. Dealerships want to know that there's parts, that the company's going to be around. They got to put a lot of money in it. There's advertising they got to do, and they don't want to be associated with the startup that doesn't make it. It's not as easy as it sounds when VinFax says, oh, we're going to go to dealerships and they'll work with us. I have friends that own dealerships here. They guarantee me, you look at it, you don't jump at it. This is AMC. Lost the name there. Went to the lower band and held, as it did back here. So Market's not in an uptrend. It's certainly in a downtrend, but it's holding support at key numbers. Now, what I expect to happen is the APE stock will be merged in with the regular common stock, and then they will go in, and I heard that they're now going to do a 10-for-1 split. So wherever the stock ends up, it could be a $40 stock in theory. Apple, big problems here. And normally at this time of the year, if you go back and you look at Apple's history, just before they do their September launch, the stock normally gets a bid up into that. So far, it hasn't shown itself. And if it comes in, it's going to have resistance, I think, at 181.24, about $4 higher. Support, if we go down a little more, is all the way here. I don't know if it's going that low, but all of a sudden, traders are saying, maybe the multiples are too high. What happened to Apple being the one stock that everybody wanted to own no matter what? Sort of like NVIDIA, right? In Google, okay, correction time. Momentum starting to turn down. Suddenly we have lower highs, lower lows, but the bias is up. So all I'd look for, can you get back to the 18-day average and regroup there? So I put it together, try to come up with that. Remember, if you want to get our report, this is the time to do it because you're not going to see it again by the time you see me here. All you need to do is move your cursor up there. Go to iraepstein.com if you want, under the word research. And if you're a subscriber of mine already, then just simply go into your member login on the website, and you'll see under special reports, it's there for you. I'm Ira Epstein. You have yourselves a good weekend, all. I'll see you come Monday morning.